right, just checking if we're live. Technical test. All right, good morning, everybody. I think we are live. Welcome to another TopstepTV London session. Today we're going to be focusing on copper, but also focusing on some educational stuff. And before I begin, obviously, everything that we say here is for educational purposes only. It's not any kind of investment advice or a signal service. So make sure you do your own research and think of everything here as education. First and foremost, right? Okay, so let's have a look at what copper is doing. Copper is opening below value. So overnight, this is what we like to say in profile trading, that the overnight inventory was short. In simple terms, it means that overnight movement went down. Okay, now how far down, that might determine what we want to do with this particular move. And right now, from where I'm seeing it, we're sort of in the middle of nowhere in copper. So I want to see what happens. We've just left some single prints to the downside. But if I look at some of my average ranges, we have not much space until we actually hit the statistical averages. And looking at some stats, the copper on Mondays tends to follow the daily ranges, so it doesn't exceed them. So that's something that we can use to make some better decisions. So rather than looking for some crazy momentum, we know that on the majority of the days, on Mondays, this particular product respects its own averages, daily and session average. All right. Now, something new is coming to Topstep. So you know how we have, like right here, I only have like one combine. But if you have multiple combines, if you want to copy trade, you might have quite a few of them in there. And then if you have some XFAs, they might be mixed in there. Well, what's coming is that you will be able to rename your accounts. So it doesn't look like they've rolled it out yet when I'm doing this, because it's pretty early across the pond. But there will be a little pencil to the side where you can click into it and rename your combine. I like to dedicate different accounts to different strategies or different risk parameters if I'm going to copy trade anything. But generally, it's good to have a better name than a very long combine number, if that makes sense. Okay, let's have a look at some other markets as well to see if we can find some opportunities. So let's have a look at maybe gold. Gold is still in rollover. I've just looked at the volumes and it's like half and half still. However, I think the old contract should expire. So they're going to have to roll at some point. I think Topstep is already rolled to the December contract, so we're actually skipping over a few months. Yeah, so they've already rolled. And let me have a look at it here. Sorry for the white charts. Opening above value. Yeah, you see, my platform is not even letting me trade that yet. That's quite funny. Okay, so opening way outside of value. So that might open up a possibility for a short at some point. But for now, yeah, I think I'm going to leave gold alone because the rollover is still not finished. And that always means a lot of trouble if you're trying to find good trading opportunities. What else? We can look at DAX. I know we don't have it yet, but it is an interesting product. So DAX is coming into some interesting areas here. We're touching the London session high from Friday. That can sometimes be a good area to go long in equities. Commodities are a little bit crazier, so they kind of overshoot. However, I prefer to aim for the value high, which is currently located at 185.05. So that could be a good area for any kind of longs in DAX. And, you know, we are working on getting it into Topstep. But just in case you trade it in your own personal accounts, something to look at. I would be more long biased on DAX because there's not much happening to cause a huge downward move, especially in Europe. So yeah, and we are still in that weekly and daily ranges, so dead in the middle right now. But generally, at some point, that upward bias in equities should show up again. So we'll see what happens there. But for now, nothing there to do. There's a tiny possibility for a failed auction here from the session range highs. But let's focus on copper for now, because copper has been moving pretty well for London, and it's been very liquid. So let's keep it going. I didn't trade this on Friday, if I show you my stats here. So, as you can see, Friday, no trades. And then we're going to see if we can continue that today and see what happens this week in this particular evaluation. Because anytime you want to trade a new product, you don't want to jump into it immediately. You want to have some sort of, at least a couple of weeks of trying things out in the combines. That's what they're there for. So make sure you use them. All right, let's see if we can get some questions. So Davey Ed says, did we not just have a failed auction on platinum? I haven't really looked at platinum much, but let's have a look now. This is not a failed auction yet, Davey. This is now touching the initial balance low. But until it actually starts spending time back inside the initial balance, this is not a failed auction. So be very careful between those two setups, right? You have the failed auction, which means that we have got outside of initial balance, went back inside it, and we're now spending time inside it. But for now, all we have here is just a touch of the initial balance low, which can actually be a pretty good area for further shorts, especially if you can find some kind of confluence level around that. Right now, maybe a session VWAP might provide that. But yeah, so for now, this is not a failed auction. This is just an opportunity to run a slower gap fill. Now, if we do go back into the initial balance and we start spending some time there, and then maybe even in the next sort of 6 minutes, we close back inside it and go over session VWAP, I may look at that. But yeah, it's not a failed auction yet. The devil is in the detail when you're looking at profile and in... I suppose that's true for any methodology, but I think that a lot of people are kind of throwing various terminologies around without maybe fully noticing exactly what's happening. So there's a huge difference between a failed auction and joining the sustained auction from an initial balance low bounce. Two very different things. But yeah, in 6 minutes we might have some more information there. But I would like to see it go over VWAP. Let me just see what the volume is doing in platinum as well. Because without volume, that could be just a load of nothing. Yeah, so if let me check where we are with platinum contract. Yeah, we're still in the same contract. Okay. Yeah, so if you look at my equity volume candles here, there's no volume behind this move. This is not what I want to see from a failed auction, right? You want to have the strong, strong push in the same direction, and then big, thick volume candles. This is equity volume chart on a 1 minute, and there's just nothing. Like, look at that. So I personally don't want to get involved in that. We have to have some power behind the move if we're going to trade it. Just going to go back to copper here. Ivan says, how do you calculate your average session range? Is it from session open or high and low of the session? It starts the calculation from the session open, but then it is a dynamic measure where it calculates the session high and low and keeps recalculating until one side of the range is exhausted. So it is not a fixed measure. It's a dynamic measure until such time one side gets exceeded. That's actually a very common mistake that I see in people like trying to code the average daily range and average session ranges that have now gotten more popular because of the TopstepTV thing. But it's the same calculation. So you take the session low, session high, keep recalculating, and then whatever the average number is, once that's reached, then that it's deemed to be average session range exceeded, or as I like to say it, exhausted. So we've exhausted the average range, and maybe now we can have a look at the reversal. But they are very good levels. Obviously, if you have a higher volatility day, that's not going to apply because it's going to be higher volatility. So in that case, you actually don't expect the statistical ranges to hold. You expect them to be shot through. And then I only look at them in regards to, oh, okay, so maybe I shouldn't be fading this. That's always a good sign. And then I would look for some pullbacks if we have any. And, if you guys are trading equities, that might be a little bit difficult because equities can be a bit nuts recently, especially this year, where there's just no pullbacks. Like, we have these massive trending days. They just kind of keep going. And you're like, this is why we started joking around about the caveman stuff. Just close your eyes and buy, and when air horn. But I think the air horns are gonna have to wait for a while, because I don't think we're done with this down move in equities. Let's have a look at Dow since we're talking about equities. Now here's a failed auction. We are also quite high above value, or the price is, not we, but the price is. There is a failed auction. Would have liked to have seen a little bit more initiation to the downside because this was pretty pathetic, and I would kind of deem this to be a poor low. Even though it is some sort of an excess, because we're going to like 4 ticks below initial balance. It's like, yay. But yeah, Dow currently having a 135 tick session average move. Sorry, not the average move, the actual London move that we've already traversed, which you can see here, 135. The overall average session range for London is 184, so we're quite far away from the average ranges. And that means if we do get the move all the way back up to the initial balance high, we could also overshoot to go all the way up to the average session range, which is currently at 41,046 in the Dow, Boomer Index. And don't know, this might be a good one for today. Now, if I get a little bit of a pullback somewhere closer to the area where this move failed, have a look at the session VWAP maybe. I might want to do a long Dow while we're waiting for copper. But for now, this is kind of no man's land. I didn't really look at this on time. Davey, so for now, I'm not. I don't have any bias on copper. I don't go into the session with a bias. Okay, I take in the information that we already have, and then I just wait for the market to show me the way, depending on what starts to happen. Like for now, we do have some shorts stepping in, and we did open with short in overnight inventories, but at the same time, I'm not rushing into things, because if this is a true momentum move down, we should see some commitment later on and through the average ranges, as apropos what I was just saying a minute ago. If this is a true move down and we have a proper sustained auction and a trending day, these ranges shouldn't matter, and they shouldn't pose too much of a trouble or cause too much of a trouble. Did I say pause? I need more coffee. So I use Topstep for both my live and any kind of evaluation challenges. This is a charting thing from AMP Futures. I mean, I have an account with them, but you know that doesn't pertain to what we're doing here. So this is AMP Futures MT5 with my indicators. I'm a bit set in my ways, so I keep using them, and they're. I mean, you know, we've done a pretty good job creating these. So copper for now, no bias. We have short overnight inventory, some attempt at a short auction, but it's very slow. You know, one thing with momentum trading, you don't want to see it just start a move and then just nothing, because that usually means that these single prints are not going to hold. So there's definitely a price velocity that comes into the whole analysis. And just the feel of things, you know, how fast are things moving? Do I really want to do a momentum trade when realistically, you know, this is a 30-minute chart over here on the right, and we're not really making any new lower lows or anything. So, yeah. So we sit and wait, right? Miss Valerie says, how did you get 4106 as average session for Dow? So this is the London session for Dow, okay? Now, the thing with the average session range is you don't have the information of where it's going to be until you have the opening price, because that's where it sort of starts the calculation. So you can't do the calculation for the New York session, because we have no idea where this thing is going to begin. So you have no starting point. Once the New York session opens, you can then start pegging the lows and highs, depending on whether you're getting new session highs or session lows, and then start calculating that. You obviously start with the average range measure that is calculated from the previous 10 days, the way I like to do it, so about a couple of weeks worth. And then as the day makes new session lows or session highs, it will start to adjust, okay? But this is just a shortened London. So this is not New York average session ranges. This is just the London average session range, which I take from London Open, which is 8 a.m., and then I run it all the way to 2:30 p.m., which is the cash session start. So I cut it off early. I think I spoke about this on Market Talking with Dee, that there's like data pollution if you try and mix and match volumes and very different players and start to calculate that into a London session. So for me, really, the London session finishes. I'm seeing some copper movement here. I mean, I'm such a contrarian, like I really want to fade this. I'm itching to fade it. But similarly to platinum, for now the volumes are very thin. I mean, it's kind of growing. So right now I'm thinking maybe longs, if we can go past the initial balance low and start spending some time there. So right now, copper bias is towards a failed auction. So longs. But we'll see. If we cannot battle through the initial balance low, those shorts are still gonna still be there. So yeah, it's either gonna go up or down or sideways. So basically, we're looking for market generated information here, and this is the beauty of it. You know, you don't have a bias. You're just following what's going along, and then when something becomes obvious, that's when you pounce. Tostino says, do you feel like U.S. equity futures trend more during London session versus... Absolutely not. No is the answer. Like if you've traded the New York session, you know how crazy they can be with trends. Like once a trend begins on an equity index during the cash session in New York, it's just relentless. Like I said, this is why we started joking around that, you know, you just don't do any analysis. You just close your eyes and buy. Now that works until it doesn't. And we've seen that in the last week with some geopolitical risks and some events that have happened that have caused everything to go a little bit haywire. Janie says, how does CL look? I don't really like trading crude oil for London. If I'm going to look at crude oil for London, it will be towards the overlap, not this early, because it just does, most of the days it's just like very slow. And, you know, this is the way it looks. So it looks pathetic. That's my take on it, because we're only, like, this is like 39 ticks of movement for the last sort of 90 minutes. That's not great. So you want to find something that really moves. Like you can't work with a range of 37 ticks. That's just very difficult. It gets very frustrating. I mean, compared to CL, copper has already traversed 85 ticks. So, you know, that's, you know, nearly 3 times more, right? Or at least 2.5 times more. And then Dow actually moves pretty well for London. 135 ticks, like that's what you want to see, right? You don't want to be sitting here for like 2 hours and just staring at like 35 tick range. Like I'd have more fun watching paint dry, let's put it that way. All right, so still watching this copper battling initial balance low. Decision point line in the sand, as always. I'm going to put a little line there and just going to mark it IB low. Iveta says, hi Dee, I mainly trade the ES in the US session, but I'm looking for something to trade in the EU morning. Which market would you recommend, gold, oil, something else? Well, it'll be something else. Copper has been my choice. Carl Hungus was the one who said, hey, might want to look at copper. But if you're trading equities, Dow can actually be a pretty good one. Because if you look at its London session average, it moves like 184 ticks per session. And yes, the New York session is crazy. It moves 458, so obviously a lot more liquid, like 3 times more liquid. But 184 ticks is not to be sniffed at, right? So you can potentially maybe even size up, maybe modify the stop loss to be slightly smaller for the London session to account for the less volatility. And then you can look at an equity index that is quite different from the others, because the Dow, you know, we laugh at the Dow quite a lot, but I actually really like it. Like I have traded Dow, and in fact, anytime people come to me as like sort of recovering NQ addicts, they're like, well, what should I trade? I usually put them on the Dow because it moves really well, and yet it's smoother than NQ. So it doesn't have those whips and nervousness intra-candle that NQ has these days. So yeah, I actually, you know, I think Dow is actually one of my favorite indices. Like even ES recently with all of this, low liquidity, summertime and stuff, and yet craziness. Even ES has started doing like weird stuff. They have this algorithm that keeps the price sandwiched throughout the entire session. So for me, the ladder during the cash session right now on ES in New York is just not very reliable because they always have the algo that runs the sandwich. And however a price moves, it kind of moves with it. So it's like, what is the point? But if you look at Bookmap right now, when the algo isn't running, it looks a lot more healthy. Right? Now you can clearly see there's some liquidity down here. There's some liquidity up here, a little bit less down here. So, and yet when you have the cash session, I'm going to see if I can go back to show you this. It's not going to let me. Okay, so yeah, but basically it literally has a block up here and a block below, and it just keeps moving. So it's been annoying me like a lot. So I'm not that keen on ES at the moment. It's still a very liquid product, but just the nature of what the orders look like, it just makes me think that it is definitely being a little bit more manipulated than I would like it to. Let's put it that way. I prefer to see some organic sort of orders and behaviors in the dome. And whenever you see algorithms, they're always very obvious there. So if you look at copper, you can clearly see that this is humans, right? So you have some orders down here, a little bit of order down here. It's not any sort of a graphical representation of like orders that are following price and are glued to it, quite obviously, right? So yeah, if you have Bookmap, pay attention to that today. It's been interesting to observe, but not something that is of interest to me at the moment. But yeah, Dow, very smooth movement. Dow is also one of those instruments that you can really size up on because it's cheap, it's smooth, and it doesn't quite whip you out in the same way as some of the other crazy products. Servant Thought says, good morning. Is gold August contract still good? Do you know what? I would be a little bit suspicious over trading gold in general because no, technically we should have rolled last Friday, but the volume for some reason is not yet moved into the December contract. But August is, for all intents and purposes, expired. Like I don't, there shouldn't be any trading today in the August contract. Because the rollovers happen on third Friday of every month in gold. And usually it rolls to the next month, but this time we rolled all the way to December. So, and it does happen during the summer. Gold does that. So yeah, I would avoid gold today because I don't trust it. I'm being very mistrusting today. Davey says, do you use 30 minutes for the initial bounce on or the 1 hour? Personally, I use 1 hour because I feel there's more information to be had after the 1 hour. And I am a follower of Dalton's methodologies, and he uses the 1 hour. That has served me really well for 11 years. So that is what we shall continue to use. But, if you find value in using the 30 minutes and you find consistently good opportunities doing that, that's fine. It's not something that's worked for me. So I like to take things slow. One thing that I really hate doing is that, come Monday, you're like all jazzed up to go, right? And then you sit down, dig yourself a hole immediately. And then the rest of the week becomes all about trying to dig yourself out of that hole. And for me, that never works out. Why? Because then I dig deeper holes. Like psychologically, even to this day, I just hate it when I start off on Monday with a loss. And it just completely puts me on tilt, and everything you're thinking about is just, oh, need to dig myself out of another hole. So this is why I like to take things super slow on Mondays, not really rush, take the obvious setups. And how are we going to do that? Well, we need understanding first, right? So do I know what the hell's going on in copper right now? No, not for sure, because we tried to go down. Now we're trying to fail the auction. So this is now becoming better, more obvious. We probably just had some kind of a release as well. Let's just check that, because that can happen around 10 a.m. London. I don't really see anything, but this is more commitment. Like, this is what I wanted to see. This is the volume that we now have. So this is now potentially a failed auction. This is what it would look like. That's what I mean by something obvious. So, before it was all just like, we're crawling, are we going up, are we going down, nobody knows. It's like everybody's hungover from the weekend, nobody's had their coffee, but now somebody's had a quad espresso, and they're like, all right, let's do some trading. So yeah, let's try one lot to start the Monday. Long failed auction idea in copper. I'm just gonna put in my entry and stops here to see what that looks like on the chart. So just the one lot. Only risking $170 on this. So again, even if this one loses, it's not a big hole. It's like fairly tiny. But yeah, this is now failed auction long. Why am I not going in like 3, 4, 5 lots? Because there's no level here. So the only level that we're using is the market generated information, initial bounce low. When you have a stronger level to bounce the failed auction off of, you can size up on that. But for me, when I'm doing these failed auctions purely based off random reversals that we've had intra-session, without any high probability levels to back it up, that's when I will size down, because there's less probability that this will work out. There's nothing else to prop it up. So yes, it is a failed auction potential right now, but I'm sort of front running this because previous candle failed to give us any sort of decent movement back inside it. However, as soon as 10 o'clock was upon us, it shot up with some volume. So I'm just trying to see whether there is merit in the longs here. And if not, I will be out of it very quickly. Ideally, when you're doing these sort of things, you want to have, a finished failed auction already. But frequently, Hogue and I will try and front run the auction, the failed auction, because it is a setup that can work really well most times. So yeah. Douglas PC says, what would you do with Dome here and now? Looked to recent breakup to VWAP. What product are we talking about, Douglas? Because that would be useful to know for more information, if possible. Someone's at the door. All right, they're not too crazy. It's mostly just the Pomeranian. So Douglas, yeah. Dow. Okay, let's have a look at the Dow Dome. Here we go. Okay. So we've got some orders up at 14,935. And there's potential for more longs. I mean, there was some absorption of sellers just at 409.29, which can mean more upside. And there is a potential for a failed auction, so that would match that. What have I done with my Dow chart? So yeah, it went above VWAP. I would like to see more commitment now, because right now there's just nothing. They're just like, tried to go higher, and now we're like, I don't know, holding hands and singing. Yeah, so it's very slow for me, Dow today. Yes, there's a failed auction, but no, there's no initiation to take it higher at the moment. And then we also have this little order block from 40933 all the way up to 40936. So until that goes away, I wouldn't be doing anything. Okay, so failed auction, no go in copper. So I'm going to kill this early for 137. And because now we're having trouble going back into the initial balance, this means that shorts are more likely to take control, and that the pop that we saw earlier was nothing more than just a bit of a shakeout before they picked up some more orders to go potentially lower. So now if I do get involved in a short, I would like to see some initiation. So let's do another feeler trade. These are just feeler trades, it's just to see how the market behaves when you enter a trade, and then to see whether there's momentum either side. You become a lot more aware of the movement when you're in a trade rather than just randomly looking at the price chart, because you want to see some movement down, right? Let me just see where these session thingies are. And then if we start to chop around and there's no volume either side, nothing. So it's going to be a slow Monday. You just have to wait for better market opportunities that will push to one side or the other. Without any movement either side, there's no trade. This is exactly what was going on with GC last week when it was in rollover. It was like, try one, gets you in a bit of drawdown. You try another thing, gets you in a bit of drawdown. That's always a sign that there's just no momentum. Or you're in a range-bound day, one of the two. And then if you are in a neutral day type potential, you just have to wait it out until the market actually extends the initial bounce to both sides, and then just wait to snipe it from either side. So it's still market-generated information. See, for now, they're not really doing anything to either side. And this is something that can, that can kind of save you on days when the market is directionless. You try one, gets you into drawdown, and you're like, You try another one to the other side, also gets you into drawdown. You need to sit back and just chill for a while. It's okay to try. There's nothing wrong with trying. But you do have to very quickly admit when you don't have a good idea what's going on. And that's fine. If you're not sure about what's going on, that's absolutely fine. Okay, so this target that I've got here as a potential to the downside might be a little bit ambitious, but let's see if they actually commit to ungluing themselves from the initial bounce low. Tessina says, did it roll to December because that contract has higher volume? Well, not yet, but it rolled to December because they started rolling into it with some more volume than the other previous 2 months that should have come before them. So I don't know why they do that. Don't ask me, because I have no idea why they would skip over a couple of contracts. But gold does that a lot. Just know that. I've seen it happen so many times over the years where you're like, oh, we should be in like September contract. And it just immediately jumps to December and you're like, okay. It's weird. Gold lives in the future. Let's put it that way. Unit order flow. How many trades do you take on average nowadays since market is really volatile? Do you know what? My number of trades per day doesn't really change all that much. It's going to be anywhere from about 5 to maybe 9. If I'm over trading, my idea of over trading is doing like 13 trades in a day. And that's usually if the day is not clear and doesn't start well. And then I just kind of hop through different products and stuff. And, sometimes I do manage to drag myself out on those sorts of days. But, if the day is not going well, the idea would be to stop at your personal daily loss limit rather than to keep going. And I do have those in place. But even so, sometimes I will have 2 losing trades if the day is not going well. Because if the day is going well, there's nothing to talk about. The day is going well, right? You're doing well. But when those first couple of trades are like, oh, God, okay. And if you allow it to smack you on the face for like full -1 hour, which for me would be about 350. Notice here I'm using half the amount of that. So, and I'm frequently bailing early as well. But I'm not going to bail out of this one early because I want to see what they actually do. And like I said, this is a 0.5 R risk for me. So yeah, if the day doesn't go well in the first couple of trades, just the way my stats work, the third trade typically tends to work out. So then I'm sort of like back to break even. And then, I kind of go up, down, but never quite make headways past like 1 hour, which is what I'm really after. And then if I have a day where like my first day immediately reaches 2 hour, those are typically the days where for the next trades I size down and I try another couple of times. I either add a little bit on top of them or I stop after like 50% from the high mark on the day. So that's just some budgeting that I like to implement. Now obviously if you're only trading one lot or one micro, you can't control your positioning in that way. So you're going to have to come up with some different ways, probably early exits and stuff, because there's no other control to be had. So yeah, it's very, very individual. So don't take, what I say, oh, Dee does, 3 to 5 trades on average, so therefore I should do the same. It's very likely that our styles will be vastly different, right? It's very likely that you have vastly different stats from my own stats. You have a different way of looking at the market. So I'm going to bail out of this now and then we're going to wait. So this is just completely directionless at the moment. They are kind of chopping in this same candle range that happened in the C period. So until we break out of that either side, there's nothing for me to do here. This is too slow for a failed auction. And it's also too slow for a sustained auction. So my guess at this point would be that we're going to be in a range-bound day, which means focusing on session range extremes. So that will mean this area for shorts and then this whole area for longs. So right now, if you look at it that way, there is no trade here because no momentum trades means you have to look for better trade locations. Now, it is Monday. We did have some imbalance at the open, but they're just not committing to either side. And just for reference, this is the candle that I'm talking about. This is the C period candle. We should have broken out of this range already if it was a failed auction or a sustained auction. Just by the fact that we haven't done that brings in new information to tell us that this is slow and we need to look for better trade location as the day goes on. So yeah, we wait and I'll answer more questions. Maybe I'll have a look at another market, but for now I'm really not seeing anything that I'm willing to get involved with. I suppose platinum is sort of having a failed auction with some sort of commitment. But even that is like 35 ticks. Something that is interesting in the Dow now is that it was not able to go through the session VWAP with any sort of conviction. And it's gone over the overnight VWAP. So I'm going to show you the equivolume candles. Now, if we get some volume to the downside, this could actually be a pretty good way to front run a sustained auction and a gap fill. It's something that I've talked about before, actually, but I haven't managed to find a real-time example to show this particular setup. But basically, the idea is that you have a gap fill potential as a setup, and then you look for the price to cross over overnight VWAP and then commit to it with quite some volume. That is the point where you want to enter, but again, there's no volume, so I'm going to keep an eye on that, because that looks interesting now. Everything else is a bit suspect. But Dow could have a gap fill, so we'll see. Asmui Athari, I hope I didn't butcher that too much. Isn't shorting the CLs to close the gap something that Edgefold data says happens like a high percentage of time? So Edgefold uses the previous day close, not the value area gap. So we're still working on getting that into Edgefold. Because right now they have TPOs, time price opportunities, in the indicator section, but they only have it by day. That doesn't serve much purpose in what I do. So what Edgefold gap fill is pertaining to is when we open below or above yesterday's close price, that's when a gap fill rule applies as per Edgefold. Now, if you look at what we're doing here, we're nowhere near a previous day's close or highs or lows, nothing, right? We're in the middle. This is an inside day, if you look at it that way. But if you look at the profile, then you will notice that we have opened below gap, below value area from Friday, from London. But there was no gap fill. There was no gap fill. So there's two types of gaps that you can come to know. One is pertaining to the previous day's close or high or low, and then how far are we gapping away from those. The other one is the market profile gap. So how far away are we from the value area distribution curve, right? That's going to happen a lot more often than the first one. So this is why I like to pair up the gap fill setups in relation to previous day's value. So hopefully that clears it up a bit more. So yeah, again, devil is in the detail when we're looking at these sorts of data and looking at stats from Edgefold. I've seen people misinterpret the consecutive bars thing as well. So be careful how you're interpreting the data. Data is all about the detail. So if you misread something, you're not going to be using the stats to their full potential. So yeah, there's a very big difference opening above or below yesterday's high or low, and a big difference between opening below or above yesterday's value area, session value area. Dr. Dax, do you trade DAX or UK futures? I prefer DAX. DAX has been something that I traded for a long time. FTSE 100 used to annoy me because they used to close it overnight, and the same thing was true with DAX up until about a couple of years ago. But now they've kind of opened it up, And I think it's actually a very good thing. So I don't like being trapped in positions. Like before, I used to sometimes run some equities positions overnight, and yeah, it was always a very anxiety-driven moment. Like, why is it going to open? But now, we don't have those issues for the most part. Right, I'm gonna move Dow over here and just write my high pose now for copper, because now I have a decent idea what is happening. So we have neutral, day fade from Val. So this will be my first choice. Value area is located at 412.45, and average session range high is located at 412.70. So they're pretty much in the same area. And then we have the initial balance high, lower. But really, if we pop that to the upside, I would prefer to see them hit that and then reverse. So wouldn't be too happy if we just turn way before then, because it means like there's not enough movement, and we always need movement. And then the second choice is a similar idea. Neutral day long from ADR low, ASR low. So those are the setups that we're looking for until COMEX opens. So either or. Don't want to have anything to do with the middle of the middle. This is all way too slow for me. And the slowness, like when I first worked at the first prop company that I went to, they put me on like fixed income and some equities as well. So, and I was like, okay, trading bonds, interesting. And you just be sitting there, because it's not really that liquid unless there's something going on with the monetary policy. And then they're like, okay, you don't like fixed income, why don't we put you on ES? And ES was moving like 12 ticks for the entire day. It was terribly slow. So I don't, I have my limit to the slowness of the products. I'm okay with it moving smooth, but still having momentum of movement and being alive. This just looks like one of those moments. It's like, is my internet on? Are we on? Oh, is it moving? Because it's just chopping around in, like, what is this? This is literally just 10, 15 ticks. So we need a bit more commitment. Kind of hoping Dow is going to wake up, but I don't know. It's not exactly listening to me. And this is what trading is about. Instead of like me continuing to do trades after I did 2 feeler trades, you have to wait for better trade locations if things are not looking right, or they're too slow. And now they're too slow. Okay, let's take some more questions while we wait for some locations. So, good morning, Dee. I usually trade NY. Do you have any timing insights, price behavior? What's the usual move around the pre-market, open 1 hour in, retracement, range, big volume, clear direction? So one thing that I can tell you, during the open and throughout the first hour of trading, on most days, like when you look at them statistically, they are directionless. And if anything, you might have a strategy where once the first 30 minutes finishes, you might have a potential to fade the next 30 minutes. And of course, there are days when it just shoots in one direction in both of those time frames. But for the most part, it's pretty directionless, because you have market makers filling their orders, and market makers, the way they work, they don't have any desire to take the price to any new levels on most days. Sometimes if the market has gone too long or too short overnight, and they can't get paid until they get to some new levels, then you will see those gap fills, which is why they're so powerful, because then you see the market makers just plowing in to get better trade locations for their trades, right? So they can fill them at better prices and make everybody money. So this is why I don't like trading the first hour. Now, the pre-market in certain products can actually be quite lucrative. I actually really like holding my DAX trades through the overlap into pre-market, and sometimes even for the first 30 minutes of the cash session, because typically after that, like I said, there's this reversal that happens, and that's actually been something that's been a strategy of mine for a long time. So you effectively go into a product that trades mainly during London, so that you don't get slapped on the face during the overlap volatility that increases typically for most products, but not in DAX. In DAX, it's like, it pretty much stays consistent, right? So you can more safely hold the positions with stop losses based on the London session, if that makes sense. So yeah, and then you just hold them for 30 minutes into the cash session and you just clip it, time stop it. All right, so Dow now has initiation to the other side. This all looks range bound to me still. So what I was looking to see here for a gap fill is more volume to the downside, but we have more volume to the upside, and now we're chopping around 9 EMA and VWAP overnight. So that's also range bound. That means this is not going to be some crazy day where we can have loads of movement for London and be, yay, this is moving. But copper might actually liven up a bit into the overlap. This is always the risk for London and trading out of hours instruments, that there's not going to be much action, right? And this is where these sort of sessions, it's why I wanted to do them, because many people get chopped up in London, and then they get to the cash session in New York, they get the volume, they get the volatility, but they've just dug a deep hole and they have no more daily loss limit left. So some critical thinking has to be involved. If you're going to trade instruments that generally can be a bit quieter during the out of hours session. So this is how you would do it. You know, you do a couple of feeler trades. If it's not really working out, don't continue to click buttons. You know, sit back, relax, and try to see if you can find more data. All right, let's go to some more questions, and then we're going to finish it up, because this is, not really something that I want to trade, but, might as well answer some more questions. Dion says, hi Dee, how does contract expiry for micro or mini gold affect gold? I ask because they differ. Well, most of the time, so micro is a derivative of the mini contract. And then the mini contract is a derivative of an already existing underlying asset, right? So they're all derivatives of derivatives. So micros obviously will follow closely with minis, but sometimes they're a little bit late with the rollover. They can also sometimes be late with pricing, but for the most part these days we have market makers that work in micros, and they generate a lot of liquidity for us. So we shouldn't have too many issues with that part. However, the contract expiry should follow, the first and foremost should follow dates, right? Because we know that the previous contract should expire on every third Friday, unless we are in a month that we rolled earlier into, like, let's say that we were in March and then we rolled into October. Well, obviously October contract is still going to be in force. But now, I'm looking at the rollover. Let's see the micros, actually. That might be something to have a look at. So contract specs. I like to look at just the regular CME quotes. Yeah, so you see the quotes are saying that they haven't rolled yet. So yeah, micros are still very much in August. Let me just see what Topstep is happening. Topstep is doing. So you see they've rolled it already. I wonder why. Okay, I'm gonna reach out to the risk team to see what's going on here, because that shouldn't have. Because volume still 30K. So yeah, that's a bit. We're gonna have to have a look at that. But yeah, so generally they should follow each other. And right now, I think they are following each other because some of my other platforms are not rolling them yet. It's possible they will roll at the open. So that sometimes also happens. They're just like, because again, London is an out of hours session for gold, especially when you look at the futures COMEX. So the biggest trading volume will come when COMEX starts. So it is very possible that all of the volume is just going to flood into the December contract in both minis and micros. But yeah, they should be following each other pretty closely. That's the bottom line. Okay, Miss Valerie says the point of control for copper is 4.8000. Would it seem plausible to think that it would go there instead of a failed auction? Developing copper point of control. Where do you find that? Where did you find that? That is from Thursday. So it overshot it. Like, I don't know where you found your point of control for copper. London session point of control was 408.21, and we overshot that by quite a bit. But the point of control from the previous day is what is the level, what is the interesting thing. So naked point of control from the previous day. Sometimes if you're in a strong trending market, you've got nothing else to fall back on, you can use previous days. But to me, this is unreliable because, again, if you're looking at the point of control as a level of interest, if it overshoots it by like quite a few ticks here, that's not really a great level for me, at least. I want my levels to only have maybe about 5 ticks slippage before they actually react. Anything over that, and I'm like, that broke down. So, and this is another reason why I don't like NQ, because you have like a level, then it overshoots it by 50 points. So that's a lot of ticks, man. And then it comes back, and you're like, okay, so it reclaimed it, but what was a slip through? It's just from my own systematic point of view, and whenever we write the mechanical trading systems, we have a filter for the percentage of slip through a level, and then if it goes through that, it's not a level. So we do have a way to kind of filter out whether the level is really broken down or whether it was just overshot so much that it can't be a level. But when it comes to naked point of control, the concept for gap fill, we only take the previous days, right? So to prevent any sort of, looking at a million days previous value areas and then going, well, which one is it going to be? If you're in a trending market, even if you're in a range-bound market, that gets even more confusing because, for example, let's see if I can go back and find a bit of a range where the prices were overlapping. To illustrate. All right, so here we go. So you have 3 days. I'm going to expand this so that you can see it better. So 3 days of overlapping values, right? And if on either one of those days, if we have a look at the point of control, it's like, which one are you going to take? This one, that one, that one, this one down here, this one here. Like, which point of control would become a level of interest? So this is why it gets a little bit difficult if you're systematically trying to come up with a strategy. And then some people will be using previous day's value, and then they will start to use previous 2 days value, previous 3 days value, and it just gets very messy. When we refer to a gap fill, that is always to do with the previous day's either value or previous day's highs and lows. So same goes for naked point of control. And also another thing about the naked point of control is that it needs to be not tested in the overnight session. So that's why this wasn't a great choice today. And this one, I mean, I would argue this was probably an attempt at accepting the prices from Thursday rather than any particular level. So accepting the late movement, the late sort of development, and then rejecting that area because it had a lot of volume. So this is the demand area. So yeah, I prefer to be a little bit more clinical with levels and how much we overshoot. Okay, let's have a look at some more questions. Jack Kane says, Deeyana, could you talk about the data and stats side of how you trade? I'm currently down a rabbit hole looking at regression and p-values. Oh God, okay. Things I don't really understand until I see plot. Yeah, so you need to simplify that. So when, there is a limit to what I will look at from a data perspective. So I like to keep it simple. Okay, and I know that maybe data/simple might not seem like they go in the same sentence, but I think if you go down that rabbit hole and if you start looking at all sorts of stuff, you are going to get lost, right? So start with something that's very straightforward, such as gap fill, right? How many times do we have a gap below or above value, and how many times do we fill it? That's it. Right? And then all you're doing is just looking for the evidence of the price to start the movement there. Because with momentum trades, there's no really good way to jump in because largely it's very difficult to limit risk in that situation. And it's just the momentum that you're trying to write out in order to account for the poor choice of a trade location. I learned this from Hogue, by the way. So he was the one who drilled it into my head when we started working together. And it was such a great way to put it because you have to delineate what type of a trade you're doing rather than getting lost in linear regressions and a whole bunch of other things. You take some very simple stats. It's like just aggregating a little bit of mean averages here and there, distribution curve here and there, and just using them as levels and seeing how the price reacts around them. So you need to simplify that part. I can appreciate that some people have like PhDs in stats and stuff, but I always find that their results, like especially if they haven't dealt with actual live markets, they never really work. Like I remember getting into an argument with one dude who was a PhD student, and he was like probably one of the worst traders that we've had on our desk at that time. And, you know, he would do these like really elaborate plans with a whole bunch of stuff that he would turn up with this massive book sort of thing. And then he would sit down to trade and he couldn't recognize a good trade location because he was too into the data set that was happening. Now that can work if you have both observational data and time series data. So you know what should happen and what has happened empirically, and then you just use the data to validate that. So for me, that's had better results whenever we looked at somebody from that kind of a background, to have empirical observational data, but then validating things through stats, not the other way around, to get a whole bunch of time series data and stats and everything, and then try to work out a strategy out of that. It's always best to get some experience looking at how the markets move and breathe around some areas. You know, you can have very simple things like VWAP and an EMA, and then just look at how price moves. Where is it? You can have some volatility bands. Very simple way to sift out what sort of movement do we have, and do we have movement at all? And then if you can match that with something that should make sense to you, that is what you should be doing, right? And to me, it leads to faster results, simplifying concepts that are sometimes overly complex for no good reason, because trading should be relatively simplistic, right? The market is going to go up, down, or sideways. So if you can find some way to justify why, for example, the market should bounce at value low from London to do a short, That's all you need, right? You don't need to look at a million other things to work out whether that's happened before, how many times. It's useful, but it's going to be more useful if you actually observe it in real time, because then your brain commits it to memory, and as a result, you become a better trader. Flurry says, I don't find microcopper in Topstep. There's no microcopper on Topstep, and I don't think there is microcopper, by the way. I mean, I could be wrong. I don't see microcopper anywhere. Oh no, you are right. There is microcopper. They don't have it in Topstep. I'm not even sure they have it on Ninja. Have a look on Topstep, on the Topstep website to see whether they actually have it. That might be an idea. But yeah, I definitely don't think they have it in Topstep, at least not yet. Maybe they'll add it. Is there anything you stick with or better than 50-50? Yeah, I mean, I stick to my my setups that have worked about 70% of the time. So things like, this is the reason why I don't get involved too much in middle of the range, nowhere sort of setups. I know that when we get to the value edges from the outside after an extended movement, which I measure with the average session range, that is a pretty high probability setup that works anywhere from 65 up to 87% of the time, depending on the product that you're looking at, and also depending on the size of the move that you had prior and time of day. But that's like another thing. So I don't like just over 50-50. I like the probabilities of the setups that I'm taking to have a better than sort of 65% accuracy. Mike Richard says, what time frame do you find your key levels when you chart them? It's not necessarily a time frame thing, because if you look at a distribution curve, that's not a time frame. That's just an overall area where price spend most time. It doesn't matter if it's a day, session, 1 hour, 30 minutes, it's all going to show up as the same thing because it's the session. So for London, the value area is on copper from 412.53 all the way up to 414.38. So that's the value low, value high range. So yeah, and then the average session range is again not time and period dependent, but I do start the calculation from the start of the session or the start of the day, depends whether it's average daily range or average session range, and then those becomes my levels. And the rest of the levels I use are market generated information, so something that happens on the fly as the market is developing. Like for now, we have the initial bounce high, initial bounce low. We have some supply in the middle, but it's like middle of nowhere, so not really interested in that at the moment. But yeah, it's not necessarily the time frame. I do have a timing tool where I use volatility bands, VWAP, and 9 EMA on a super low time frame. So this is what we see here. These are the equity volume candles as well, because it smushes volume into a candle, so I don't need to look at it underneath the chart. This way I can clearly see whether there is volume for the particular entry that I'm looking for. Let's have a look at YM actually. Yeah, so for example, you remember how I was, if you were here earlier, I was looking for the volume to come in to the downside at the crossover of overnight VWAP and 9 EMA on a 1 minute chart. We didn't get that. We actually got something completely different. So I stayed out because it wasn't the gap fill setup, which is what I was looking for. So you stay out. To me, trading is more about working out when not to be involved rather than when to be involved, because typically when you get a setup, it's like, it's an eyesore. It's super obvious, like, take me. I'm here, I make money. But most of the other setups will be like, that's not, oh, okay, is that? Probably not. So whenever I start having those sort of thoughts, it means I need to step back, and I urge you to do the same. What are my levels for NQ today? I don't have any levels for NQ yet. I like to wait for the market generated information to happen on NQ, and then also on ES, and then match those two together. Now, I can have a look at the average daily range. If I can ever find it. Here it is. Okay. And I can see where the value area from Friday's trading was. It was a small value area, so one thing to note. The average daily range low on NQ is 189.91, because you can round up numbers in NQ. Average range high. Now this is the daily range. I don't have the session range until we actually open the cash session, because I don't know where it's going to open. So average daily range high is 195.64. And then we have the value areas, which could be bounce points for further upside or downside as well. Depends on, again, where we are. So value high for NQ is 192.11 half. And then value low is 1906.75. 1907. 19087. So let's round it up. But it looks like the values have started to overlap from Wednesday. Why do I say that? Because we have Wednesday value, Thursday value, Friday value. So overlapping values could mean a bracketing market, and it could mean a reversal, which means we may see further upside from one of these levels. So we could go into a range, bounce a little bit, and then do a breakaway again. Every time the market starts to do distribution, so it's kind of like a Wyckoff thing, very similar concept. I call it the phase one. So it's accumulating or distributing, depending on whether you fell or went up. So effectively, whenever that happens, there's a higher chance of a turnaround. But it's Monday, so take it slow. Don't just go, yeah, where do we buy? But there is a chance that we might turn around at some point this week. What data provider do I use? Just Ninja. So I have level 2 on Topstep. So you effectively just load up the bookmap indicator in there, press F5, and it loads it up. So it's very simple. Leonel Perez says, hey Dee, not long ago you mentioned a web that does statistics on the markets. You might not remember. Oh, I do remember. Yeah, of course I remember. It's Edgeful. I use it all the time. Here it is, Edgeful. And in fact, Andre might be in chat. He's usually awake around this time, the CEO of Edgeful. Yeah, so this is it, Edgeful. They are Topstep partners, so do check them out. The things that I find most useful is if you go to price action, gap fill if we're opening above or below the previous day's completely outside of the range. But green and red days by weekday, very, very important. And then I also do a custom session, short London. And then I look at what's going on here. This is another reason why I was bailing early, because there's no statistical relevance here. It's 55%, 45%. This is the year-to-date sample size. I also like to look at 6 months. Again, 50-50 for Mondays. 3 months, 46, 54. So there's nothing there to tell me whether today we can have, like, let's say a 65% probability of being green. We don't have that today. So that's why I'm a little bit on the fence whether I should be going for momentum trades at all, because there's no stats that can support that. Another thing that I really love looking at is initial balance breakout. So this is a profile thing, and we can have a look at whether there's any statistical relevance there. Similarly, we have single break that happens 51% of the time during short London, and 42% for a double break. Again, stats are not really telling me much. Now, if we change that to the entire COMEX, so let's have a look at how that would change the stats, and then we're going to finish it up. So this is now not short London, it's COMEX. Look at that. So you have single break of the initial balance 69% of the time. So if you see copper breaking to one side of the initial balance, don't necessarily expect that we're going to go into a neutral day until such time that you are in a day that has a 29% chance of occurring, right? So if you see the neutral day type, yeah, that's great. So we are in a 30% roughly probability of that kind of a day occurring. But for the most part, you will see the single break at a rate of 69%. Now, if we go up, we see still 6 months sample size, 64%. Year to date, still 60%. So there's definite value in knowing that copper breaks the initial balance to one side by about 60 to 65%, even 70% of the time in recent months. So that's how I use it. It's very useful. It's so amazing. I used to have to write my own code to count how many times I call them my counting algorithms. They weren't like algorithms that you can run in the market, but I would just come up with like some very simple conditions that I want to see, and then I would run those. All right, guys, that's it for today. We went a little bit over, so yeah, I wanted to answer everybody's questions. So don't forget to check out Fast Markets today. And obviously we have Dakota, who is now starting his slow market session earlier. So he starts at 7:30 p.m. CT, and he actually goes on for 90 minutes. That runs from Sunday to Thursday. So check that out. And yeah, that's pretty much it for me. Thank you for joining me. Don't rush into Monday. Again, try not to dig a massive hole for yourself today. And let's take it slow. Let's breathe, meditate, do some exercise before you trade today. And I will see you again tomorrow.